Great. So now that we have everybody settled in, I've been observing for the last 2 days on the kind of themes that have been spoken about at the various panels that have taken place over here. And kudos to the Thai team, first of all, for putting together a fantastic event. Most of the conversations that we've had up till now are related to some micro themes around investing, sectors, startup investing, scaling the companies, etc. I think it's also important to understand India's advantage from a global perspective and where things stand. There have been shifts for India in its positioning in the last couple of years, especially starting from the COVID era and how we've capitalized on the opportunity over here. And I think the panel over here is intending to bring to light some of these points where we can sort of mull over and also understand what lies ahead of us in terms of opportunities. So I think what we can do is we can quickly start with a round of introduction, quickly about what is the work that we've been doing in this space. Mohit, maybe we can start with you.
Hi, can you? Yeah. Good afternoon, everyone. I hope you all are awake and not sleepy. Hopefully, this panel will sort of awaken you. I run ITI Growth Opportunities Fund, which is an early stage practice based out of Bombay. We've done a host of very interesting things over the last 10 years. I've built Ecom Express, which is the second largest logistics firm in the country. Grab sold to Reliance, made mistakes like Local Banya, Bolt, which is in the EV space. But yeah, it's just been an incredible journey of building and working with some of the most pedigreed entrepreneurs in India. And that's what we've been doing over the last 10 years. We now head to a second fund, hopefully doing a larger thing. So yeah, that's like a brief on us, and anything else, hit me up on LinkedIn.
Hello everyone. I know it's hard for me also after good lunch here, so especially with the Hyderabad food. So this is the Akripus Good. I'm a founder, managing partner at Dallas Venture Capital. So we're a cross-border venture fund based in Dallas and also Hyderabad. We're close to $150 million AUM. Basically, we invest in B2B SaaS. Our thesis is, invest in companies, already have product market fit. How we can help them, go from that $1 million revenue to $10 million revenue. So that's our key thesis. And luckily, we have done some pretty good investments last 1 year here in Hyderabad and also Chennai, Bangalore, even Haryana. So love to talk to any entrepreneurs who has really product market fit.
Hi everyone, this is Janvi. I'm a partner at JSW Ventures. So we are a venture capital fund, an AIF. Unlike the name suggests, we are not a corporate venture capital arm. We are an independent fund, raise monies from several institutions, family offices, HNIs, etc. Apart from the Jindal family, of course. We're right now on our second fund, invest in tech startups, quite sector agnostic, but focus on enterprise SaaS, B2B marketplaces, health tech, consumer tech, agri-tech, and so on. Some of the success stories from a Fund 1 have been Purple, Homelane, HealthPlix. We're deploying actively as we speak. In terms of check sizes, we are early stage investors, pre-Series A, Series B, $1 to $4 million is our typical check size. I joined JSW Ventures very recently. I've had a wealth of experience in investing from my days at Avishkar Capital, where I did several investments in the agri-tech, health tech, and climate spaces. Looking forward to apply my investing experience at JSW.
And just by way of introduction, this is Disha. I am an investment director at Avishkar Capital. Avishkar Capital is one of the earliest impact-focused venture capital funds. We started our journey of investing almost 2 decades back. We've invested in over 70 companies, predominantly in India. So as you can see from the panel over here, I think we have a good mix of people who have the global experience to understand what is the world sort of looking at from an outsider's perspective, and also the the excitement and the encouragement that we've been seeing in our own startup ecosystem from within, right? So I think just to set the context over here, right? Globally, I think we've already been hearing news about recession setting in the US. Some say that it's almost imminent. The recessionary sort of pressures that US and Europe have been seeing of late, and even the global supply chains that have come under stress because of the geopolitical events, right? Versus this, when we look at India and we look at the headlines that we've been making, IMF has pegged India to be growing at 6 to 7% for the next couple of years, which is the highest for an economy or a key economy of this size. We've been seeing credit growth at the highest level at 17%, which is unprecedented. Our own stock exchanges, Sensex Nifty, have been reaching all-time highs. Now, in contrast to the global backdrop, and maybe I can pull in Mohit and Janvi over here, what do you see as India's positioning in the global arena?
Sure, I can go first. Thanks, Disha, for setting that context. Yeah, I mean, we've been, talking a lot about why India has been doing so well. India continues to be like the investment destination for a lot of global funds for the fact that we've been growing at a spectacular rate compared to any other economy in the world. But let's just look a little deeper and understand what are the top reasons. I think one big reason in my view is that we're a very resilient economy, right? While most of the countries around are seeing sluggish demand internally, we are a growing population, aspirational population, moving from poverty to aspiration class. It's a huge country, a huge working population compared to any other economy in the world. And what is really fueling all of this is, not just the private sector and the startup ecosystem, but also the government policies, right? We're seeing a lot of interesting, positive movements, positive steps taken by the government in terms of building up, supporting the building up the JAM Trinity, which has really boosted the fintech space in India. And I would say that the way we've leapfrogged in financial inclusion by way of fintech, we are really poised to really leapfrog in several other sectors on the back of digital and financial inclusion. And just to go a little deeper on this, if time permits, I think there is a lot of opportunity for disruption of the entire supply chain in India. The fact that we're so disintermediated, there's so many MSMEs, right? MSMEs has been the backbone of India's growth story up until now. But because of lack of a national market, being really functional, MSMEs have not been able to expand. But with financial inclusion, fintech, and digital tech, we see a lot of opportunity for small companies, startups to really grow, build large platforms. And I think that's really stand out as a big opportunity for India, next phase of growth. And that's why we as JSW Ventures are extremely bullish on platforms, B2B marketplaces. And on the back of that, on the back of tech, SaaS opportunities, building something for the world, supporting enterprises to grow within India and outside of India. So I think these are some of the key takeaways from a startup lens, from an investing lens that I'd want to share with regards to how India is standing away and standing up compared to the rest of the world.
So of course, I think Janvi's pretty much covered the more macro side of it. But the way I look at it, right, is Uday Kotak actually made a very interesting statement about how Kotak Bank was built, and that's pretty much applicable to India. The world's been sort of putting out these landmines across all of us, and country after country is actually walking into these landmines. You have China, which was the fastest growing economy in the world, who's basically caught in its own set of problems created by themselves, where the government just now has decided that every single tech company should be moderated, should be regulated by us. The US has adopted this crazy stance of just printing and throwing money. Sorry, Dayakar, I know you're from the US. But the last 10 years have been just absurd, right? The world's just been solving problems by throwing money at it. And the reason why you're talking about a recession today is because money alone can't solve problems. It leads to high inflation. And we have to thank our regulator, we have to thank our government for navigating us through these landmines across our path. trust me, the next 10 years up ahead have been built for us to just capitalize. You know, for those of you who know PK Gulati, who's been on this panel a lot more than I have, he and I have a 10-year bet where I've told him that half his friends, and including him, will be coming back from Dubai and all the other parts of the world. You'll be doing a reverse migration to India. Because this is going to be the country which will leapfrog, because it's like the perfect storm for us. You've got the economy in its right space. You've got a great demographic profile. You have young, ambitious Indians who are going out there, building great businesses. And I think that the decade up ahead is incredible for us. So yes, I think we deserve a short-term break in both valuation correction on the listed as well as the unlisted side. And it's healthy for the markets. Don't panic. Don't think of it as a recession. The long-term fundamentals for this country look incredibly great versus, I think, possibly every other country on the planet today. So start taking a 10-year view. Start envisaging India from a 2032, 25 trillion economy. Each one of us will have 10x more to do. Will have a net worth 25x than what you have today. And all of this is going to be on the back of digital, not on the back of paper currency. Start seeing the bigger picture, and you will see what are the macros of India in its entirety.
That's quite interesting, and Dakar, I would like to pull you in here, right? Mohit touched upon the valuations being corrected, right? And in my experience, capital is jittery, right? It's good to say that you need to look at the long-term picture, but capital is fleeting in that sense, and the earliest signs of risks, you see deployment strategies change. With the overall pressure around valuations and also funding activity seeing a slowdown, is this because of the change in capital deployment strategies that's happening at some place, or how do you see that?
It's interesting. For me, if you have a good company, good product, no matter really what the ups and downs go, you will get funding. That's the one thing I have seen my own company. When I started, we raised a bunch of money, $55 million. 9/11 happened, but we are one of the 4 companies survived the whole 9/11 downturn. Then we saw in 2008. So I've gone through like these cycles, or 2 or 3 right now. So we are seeing the same thing right now. Good news is for us, we're kind of, all of us investing very early stage, right? Seeds to Series A, I think pretty much I haven't seen at least the company's valuations going down. They are really already have a product market fit, especially what we are investing. Yes, some of these companies really way overvalued. I don't want to name some companies right now, but definitely if they have good product market fit, they have some traction, and we have seen they're able to get good valuations, reasonable valuations, not like a 20, 30x, but anywhere 7 to 10x of their revenue, right? As long as they're doubling their revenue. If they have shown, this is what we kind of call, right? Triple, double, right? Those used to be kind of unicorns, but we're not looking for unicorns. We're looking for fundamental, revenue, and make sure like the company is able to grow at least 100%, right? With that, I think, there is a definitely, companies we have some issues when they're going from a seed to Series A or a Series A to Series B. Especially the growth side, some companies are struggling because they have raised pretty high valuations. So they're trying to do what I kind of call sometimes I call a bridge to nowhere, doing a convertible notes and all that. So, but some companies, we have, seen some of our portfolio companies actually, able to raise Series B, pretty good valuations. As long as they're, again, if they're following their mantra, what they said, the investors willing to give their valuations. That's what we have.
And, to take that point further, you mentioned that there is sometimes a struggle for enterprises to sort of jump over a certain hurdle in terms of scalability and sustainable business models, right? And I think where we stand today, globally, there are large pools of mandate-led capital that has opened up, whether it's around themes of climate, ESG, impact, and so on and so forth, right? As in India, right, how can we sort of try and capitalize on getting more and larger pie of that capital pool? Any thoughts, Mohit, on that?
No, I think the math is simple, right? We are the most populous country in the world. which makes us the biggest TAM in the world. So all the themes that you want to play, if you want to play in a country which has 1 billion plus people, you can't play it in China anymore because the state government there has basically regulated everything. So we are the largest. Whether you're an Israeli startup, whether you're an American startup, or whether you're a Southeast Asian startup, if you want to see high volume numbers, if you want to see large amounts of consumption, it's going to happen in India. So, I mean, I'm not an impact investor. I think, Disha, you're a better person to gauge that side of it. But I'm saying across D2C, across consumer, across fintech, across anything that you do, cybersecurity, I think India is, just by nature of the numbers that we have, we are the largest TAM on planet Earth today. And let me put it this way, we're not just a TAM, we are actually a market-ready TAM in its way, right? A market which can be touched. And imagine there's like still about close to 35 to 55 million Indians who've never even seen a smartphone. So they go from no G to 5G. I don't know if any one of you has activated your 5G on your phones. I'm getting 600 Mbps speeds on my phone here. This is insane for all of us who were born in the 80s and 90s. You know, we started off with dial-up networks which were at 10 kbps. We're at 600 Mbps today. Take that kind of internet, bring more people on it, and this is the impact and the TAM that we have at hand.
No, that's quite correct. And in terms of, how do we look at impact, and for the larger consumption, impact is very different than ESG. Impact is something that can be amplified through tech, and which is what funds like us are also trying to demonstrate through our investments. But bringing the question back to you, Dayakar, I think there has been an active theme of build in India for the world. Now that globally we see, the economy is under pressure, does this theme see some sort of a fizzle out, or do you see merit in this theme going forward as well?
No, it'll not fizzle out. I think it's going to grow really well. I'll give kind of quick, my own kind of observation, right? So India has kind of gone through, what I can call a startup 1.0, 2.0, 3.0, or phase 1, phase 2, phase 3. I think phase 1 was pretty much, India became a service, industry pretty much, right? Providing for the whole world. If you look at really, we should give a lot of credit to the service companies. During COVID, they were able to run the whole world without any interruption, pretty much, right? There only 1 week, there was a small interruption when they are sending employees from their offices to houses, getting the security set up and all that. But amazing, right? A lot of credit goes. I don't know how many people who have service companies, especially from Hyderabad, they have done a great job. So I'm proud of it to say, really, India showed really it can be a country can service the whole world, right? So that's number, phase 1 was that. Phase 2, a lot of e-commerce companies came up, right? Now phase 3, I truly believe now product companies like that, right? You can see B2B SaaS companies. We just investing in one company from Chennai. Hopefully we'll be announcing pretty soon. They do not have even a salesperson in the US. They're already doing $3.2 million revenue. This is all product-led revenue growth. And that's what I kind of call a 90, 90, 90. First 90 seconds, you should be able to download it. Next 90 minutes, your customer should be able to get wow factor. The next 90 days, you should be able to close the deal. So if you do that one, I think India has a great, great opportunity. I mean, we are seeing already because, Wipros of the world, TCS of the world have built great, great programmers and also product managers. And companies like Zoho and Freshworks create a lot of good inside salespeople here. So it has the whole ecosystem to sell from here. So I think I'm very bullish on, especially as you know, we've been investing in India for the last 10 years. Our first company we invested in IIT Chennai based, I know CEO, he was here, like Kedar, we invested, with NEA only $1.2 million. But the company never raised extra penny and is already doing close to $1.5 million revenue per month. And they're selling in India and selling in Asia without going to, so you'll be able to sell India as you talked about, the huge TAM here.
And that's really phenomenal. I think I'll remember this 90-90-90 strategy for some time. Just to zoom out a little bit, and Janvi, to get your thoughts, I know you clarified that the JSW Funds is not a corporate VC. But just thinking from a corporate's perspective, now that valuations are reasonable across, do those surplus capital deployment strategies change and get channelized into more business expansion than taking more sort of investment bets? Is that something that could play out?
So first of all, I don't think valuations are easing out, right? Especially in the early stages. Probably Series B plus, as Dayakar also highlighted earlier, valuations are sort of, I would say tapering or flat rounds are probably happening. But in the early stages, as Disha, you're also aware, the entire VC ecosystem has so much dry powder, right? And capital is chasing good companies, and good companies are the ones who are going out of the market and raising, right? And a lot of funds do have dry powder to support their investees for some more time till the time the market again comes back to the original levels where they were. So I think at least for the next 6 to 8 months, do not see corrections as such in valuations at the early stages. Coming back to your question on corporate venture fund and strategies. Um, so a corporate venture fund is very differently structured, right? They have a very strategic interest in the investments they want to do. And hence, their investments will be aligned to their core business, or they would want to invest in complementary businesses. JSW Ventures is a very independent fund. While we take inspiration from JSW Steel, JSW Cement, Energy, and so on, the ethos of JSW Ventures is to function as an independent fund, invest in new age tech enterprises, and get inspiration from them while supporting the startups with corporate governance, scaling up 1 to 100 and so on. But the idea here is to support entrepreneurs in India, support the tech ecosystem, and be a very scalable independent unit by itself.
Got it. And just quick thoughts from you, Dayakar and Mohit, in terms of just the global deployment, capital deployment being channelized into India in terms of the sectors that you see as breakouts, say in the next decade or so.
I think, Disha, I was speaking to a couple of my friends at Sequoia and a bunch of other venture funds, right? And this is already happening if you look at the stock markets, right? The reason why we've had such a resilient stock market is because the domestic SIP flow itself is like hitting crazy record numbers. I don't think, in some ways, we are Atmanirbhar on the stock market. So, historically, the joke was that if the FIs decide to sell, stock markets will crash anywhere between 20 to 35%. Now they can sell, they can do whatever the hell they want to do. India doesn't care a monkey's fuck about it, right? Because our inherent SIP flows are so high, our mutual funds are so flush with capital, we'll keep buying, right? Because we believe, you have to understand India, you have to stay in India and believe in the potential of where India is. I don't think sitting in the US, Dayakar, with all due respect to you, I know you traveled a lot back, but I don't think fund managers, more so fund managers who are not spent time in India, can take a call on this country sitting there. The next 10 years, and like I said, I'm sorry, I'm being a little more repetitive with regards to, because I don't like to talk in a year's time, I'd like to do a 10-year sort of vision. I think for the next 2, 3, 5 years, we will become self-sufficient across all these asset classes, whether it's venture capital, private equity, or, on the stock market side. And I keep telling everyone this. You look at alternate investments as a percentage of total GDP in the US, right? It's about $650 billion as a practice. India, all domestic funds put together, Avishkar, of course, one of the larger ones, all domestic funds put together, domestic raised capital is $14 billion. That's it. And we are a $2.5 trillion economy. This pie will expand and we will be a larger portion of that. Imagine this practice being a $200, $300 billion practice over the next 5 years or 10 years. Do you think we care about capital coming from outside? No. We have enough and more to do here. There's enough local capital. And I think, let time just pass through. This whole dependency on what a Tiger is doing or what a Sequoia is doing will all reduce. What Bloom will do and what we will all do will matter more.
Good points. So I do spend a lot of time here. So we do have a team here. I agree with our panelists here. But basically, you do have to spend time. Others, you will not understand the entrepreneur's mind here. So to give just kind of, I think, what the emerging thesis going on right now. So we kind of been looking at one is the cyber security, right? I think cyber security is never going to die, in my opinion. Or if you look at, you can see every year still continue to grow 17 to 20% right now. So we did 1 or 2 investments actually recently in India. One is in Bangalore, one is in Hyderabad right now. 2 companies, ViewNet and also Blue Sapphire. So same way we're also seeing, we always don't look for 20, 30 years ahead, but like look for because we do have to return capital to our LPs or investors. So we look for companies. Are the technologies also going to come? The two technologies definitely we look at really within the what I kind of call a software infrastructure layer. One is, I don't know how many of you heard or not, but it's already becoming a prevalent in the US, and it's going to become all over the world, what we call like a confidential computing. This is really basically, I don't know how many you heard, an Apple device, Apple cannot really break the device because they have a different chipset just for the password protection. That's the reason they cannot break it. So same way Intel, AMD, they came up with a new different chipset just for the confidential computing. So in this way, like all the banks, everybody can move the data to the cloud. If you look at only 10, 20% data actually move to the cloud today. So there's huge opportunity to move all to cloud. So we are actually looking at that area. So other one is what we call a software supply chain management. So I know it's kind of a lot of words, but that's these two areas we feel I think is going to emerge in the next 2 to 3 years.
Great. So I think we've got the sectors from Janvi on terms of the B2B supply chain and the SaaS. We are looking at something very high tech in terms of technology companies that probably you as Dallas VC are looking at. And I think Mohit, you've been forever bullish on India. So I think that sort of continues and really sort of shows through.
I'm
as
bullish
well.
on all sectors. Do anything in this country for the next 10 years, you'll make money.
So all
Just do it right.
entrepreneurs, he's carrying the check over here. So you can just sort of tell him you're in India, working in India, and he'll write the check for you, right? No, I think this has been great. I think the conclusion over here is that there has been an increasing financialization of the country itself, right? And this is a term that we are going to hear a lot in the months to come. All guns worldwide pointing towards India because for the lack of any better opportunity and the fundamental sort of story being strong for our country, this is where the buck stops. Thank you.
Thank you, everyone. Thank you.